Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, and welcome back to the Massive Passive Cash Flow podcast. This is Gary Wilson, your host. We're glad to have you back. We got a great guest today, Ladislas Maurice, all the way from Istanbul today. And
hey, how are you, Gary?
Good to see you. Yep. Thanks for coming aboard. So, yep. And before we get into the interview, guys, I just want to remind you, if you haven't yet subscribed, if you could please do that. It's, the podcast, of course, is on 30 different channels, including Stitcher, iTunes, and iHeartRadio, the three biggest ones. So we appreciate that. And also, make sure you check out the new website, globalinvestoragent.com, because we now have agents in more than half of the United States, including Canada, even the Bahamas, and we also have reach currently in 13 different countries. So these are agents that are not traditional agents. They're trained to serve you and I as investors. They know how to identify properties, analyze them, negotiate them, both on and off market deals. This is really important. One of the most important members of our team are these folks that can be out there, doing the heavy lifting for you. So in any case, let's get back to Ladislas. Ladislas, I appreciate you doing this, man. I know you're busy, and I know you're halfway around the world right now. So I know we're very grateful to have you on board. If you wouldn't mind, you've got an interesting background, and what you're doing in the world is pretty compelling for people to listen. So would you mind just giving us some background on yourself and how you got to where you are today?
Yeah, with pleasure. So background, bachelor's of business from Bishop's University in Canada. Then I studied business and law at grad school in Australia. Found a job with Nestle, the big food company in Switzerland. And they then sent me to Africa for many years to work as an expatriate there. So my last role was being on the executive board of Nestle in Ghana. I was in charge of the dairy business for a few West African countries. So I did that for a number of years. And at the age of 30, I figured it was time to try something new. And I wanted to explore my options. So I quit and I went on a big road trip with my parents, actually. So we drove from Oman in the Middle East, so that's near Dubai, to Paris by car.
Wow.
So it took us 3 months. You could do it in 2 weeks if you just drive 24/7. But it took us 3 months. We took our time. We went through all of Iran, Armenia, Georgia, Turkey, Bulgaria, Greece, Ukraine, Romania, just all of those interesting countries. And along the way, I saw so many investment opportunities because my issue was looking back when I was working full-time in corporate. So, 60, 70 hours a week, I didn't have enough time to focus on my personal finances. Mm-hmm. But being out there for a few months and taking my time and looking at these countries develop, I was able to spot opportunities and I started doing some deals. And then deal after deal, essentially, I just never went back to getting a job. Mm-hmm. I realized that I could do this full time. So now it's been a number of years, 5 years. And after a while, some of my friends were asking me, Ladislas, we always see you in these weird countries. You're always traveling, but you don't seem to have a job. What is it that you do? So then I started this blog called The Wandering Investor for fun, just describing the opportunities that I saw as I was traveling around. Mm-hmm. And it took off, and now it's also a YouTube channel. So it's been 5 years. I'm a full-time investor, focusing mostly on emerging and frontier markets, and with a big part of my focus being real estate in these markets.
Nice. Well, you're in the right place, because that's what we're all about here on the Massive Passive Cash Flow podcast. It's not that we don't invest in the stock market. I mean, I do, and I never discourage anybody from anything that's working for them or they have an interest in. It's just real estate should absolutely be part of everybody's portfolio. It's a great balance. It's a physical, tangible asset, so it always has value. And if you purchase correctly, it'll not only go up in value, it'll generate revenue as well. And you can certainly do that with other commodities, but let's face it, real estate is far more highly leverageable and it's expected to be leveraged. So it's easier to get money to buy real estate, much easier than to get money to buy businesses or stocks or bonds. So let's go ahead and dive in deep then. What type of properties, or do you have a specific type of property that you like yourself personally to invest in? Or because I know for me, I started off with single families and duplexes and eventually got into bigger buildings, and now we're getting to other strategies like assisted living, Airbnb, corporate housing, things like that. But usually people start off with one area. So what was that for you? What was your initial focus area for real estate?
My initial focus was residential, because it's what, as a normal retail investor, it's what I understood best. So I started my first deals with retail, with residential housing. Now, and I think I want to go back to what you said with regards to real estate being highly leverageable. And I think that we can dig into this. Whenever you invest overseas, essentially pretty much everything is different.
Mm-hmm.
When you go, especially in emerging and frontier markets, when you go to a country like Turkey, or if you invest like I've done in some West African countries, there is, or even in some European countries like Ukraine, Montenegro, Serbia, etc., there is no MLS. These are countries that are very data poor. So there is no central database of all of the information where you can sit down, have a spreadsheet, an Excel spreadsheet, pull out some data, do some numbers, etc. Then when you identify something, you go see your friendly banker who's happy to give you 90%, and you just need to put a 10% deposit. That doesn't work. Most of these countries will not give you any credit, any access to leverage. They're mostly cash deals. And that's mostly the case when you invest outside of your home country. Mm-hmm. Some countries will give you mortgages as a non-resident, but generally you'll end up overpaying. Yeah. So as a foreigner, when you invest overseas, you generally want to go to countries where they're more cash markets, because that's where your cash is valued. Mm-hmm. I wouldn't want to go to America. I've done deals in the past in America, but the reality is I'm competing against Americans that have cheap access to credit, which I don't have. So I end up putting myself at a disadvantage. But when I go with cash in a country that needs cash, in a country where there isn't any leverage, then my cash is actually respected and I can potentially get better deals. So investing internationally is more for people that are sitting on cash and who want to diversify away partially from the United States or from Canada, who want to have something outside of the normal place where they invest. I think that's the key value proposition.
Yeah, I agree. Now, are there any? And I know every country has different customs. Some countries are similar. Like, for example, all of the English-speaking based countries, England, Canada, U.S., Australia, New Zealand, have similar laws because they're all based on laws going back, hundreds and hundreds of years to the old landlord laws of old England. But other countries are not like that, like you said. So, are there countries where there could be a tax advantage, for example? Now, when I say this, I know I'm not a tax attorney. I'm not an accountant, but I know the U.S. will also, for those of you who are U.S. citizens, U.S. taxes on what's called worldwide income. So just be careful if you think you're going to go and spend your U.S. dollars and South Africa buying properties, and you make money, and without getting into a long, deep hole on legal strategies and how to do that. Just know this: the U.S. will try their darnest to find you and find that money and tax you, even if you had nothing to do with the United States. Other countries don't do that. They only tax the money you make in their country. So I just want to preface that, Ladislas, because I want to make sure nobody says, "Hey, well, Gary Wilson of Ladislas said this," But can you think of countries that can provide a greater tax advantage to people, and really in any country, for investing in those particular countries, incentives and things like that?
So You're right. When it comes to Americans, whatever you do, the IRS is going to want their cut. So, you're going to have to declare the income. There's no way around it. You're going to have to pay your taxes to Uncle Sam. For Canadians, for example, if you're a resident of Canada, and again, none of this is tax or financial advice, but the overarching principles is that if you're a Canadian tax resident, then you have to pay taxes on worldwide income, no matter where essentially the assets are located. So, and then what you need to do is to sit down with your accountant, with your CPA, and to look at the double tax treaty agreement between your country of residence. So it could be the US, could be Canada, wherever, and the country where you invested in real estate, and to see how real estate gets treated. Because sometimes it gets treated differently from an income point of view or from a capital gains point of view. So it's very important to read these double tax agreements if there is one. But generally speaking, investing overseas is not about tax advantages. It's about diversification. So we're in a world where there is a lot of uncertainty, a lot. And having hard assets overseas is one way to reduce uncertainty in your own portfolio. And if I take a step back, it's hard to find markets that offer better returns than in the US, to be completely frank with you.
Okay.
But what these other markets offer is this diversification factor, and it comes from a few different angles. So it's not just diversification in terms of putting a bit of money overseas in a different jurisdiction, but it's also sometimes some of these countries will give you residency if you invest there. So for example, Montenegro, a beautiful little country in Southern Europe, south of Croatia. It's a little country of barely 600,000 people, stunning on the Adriatic coast. If you own real estate in Montenegro, you are entitled to, as the law stands, you're entitled to residency for you and your family. So if things were to take a turn in the US, if things were to happen and you felt you needed to go somewhere else, to live somewhere peaceful and quiet and also more affordable, you could just land in Montenegro with your family. You would just need to show essentially your title deed, a few documents from back home, FBI report and birth certificate, etc. And a few weeks later, you would be granted residency, which means you could live in Montenegro full time. So it doesn't mean you're allowed to work there, but you can, work online and you can live in Europe. So, and you can do this by just buying an apartment of, less than $100,000. There's no actually minimum. So that's a tangible benefit. Other countries like Turkey, where I am right now, and I'm seeing an increasing amount of Americans and Canadians doing this. If you invest for at least $250,000 of real estate in Turkey, anywhere in Turkey, whether it be on the primary market or the secondary market, you are entitled, you and your family, so your spouse and any children you have under the age of 18, to Turkish citizenship. So you become full-fledged Turkish citizenship. You buy the real estate. There's an assessor that comes that says, yes, it was $250,000. It doesn't have to be one apartment. It could be a few. That total $250,000. And then approximately 9 months later, you become a Turkish citizen and you have yourself a new passport, which opens a world of opportunities with regards to the Middle East, with regards to Asia. Because and we're going to have to become a little political here.
Yeah.
But many people are of the opinion that the world, the center of the world, the center of power is gradually shifting from the North Atlantic gradually to Eurasia. As this shift happens, being able to obtain citizenship for free, processing fees are just a few $1,000s for free, for you, your family, your children, and then your descendants, because then your future children are entitled to it. Your children's children will also get Turkish citizenship. We don't know what the world will be in 50 years from now.
Right.
Maybe the US will not be as strong as it used to be, and maybe Asia will be stronger. I don't want to be political here, but it's an interesting hedge. And by buying real estate here, you create opportunities for yourself and for all of your descendants for generations ahead. And all you need to do is buy for 250K real estate.
Yeah.
And real estate in Istanbul. So in near core centers, I've been here for a few weeks. I'm looking at real estate for myself.
Okay.
And you can get apartments that need a full renovation, obviously, but near the core center of the city. And we're talking of Istanbul. So it's a city of 15 million people. We're talking of Constantinople. We're talking of a city that's been around for thousands of years. It's one of the cradles of civilization. And you can get apartments here for approximately $1,000 a square meter near the core center of Istanbul. So I'm not too sure about square meters for your American audience. But then again, if you're going to invest overseas, you have to get with the program and understand square meters. So just as a matter of comparison, the average price in Paris is approximately $11,000 per square meters. And here in Istanbul, you can get for $1,000 a square meter. So just to show you how cheap it is. So sure, it comes with a number of risks. I mean, Turkey's Turkey. So there are regular devaluations. I mean, the country is going through an energy crisis. Then again, Europe is, generally speaking.
Yeah.
There's always political uncertainty. There's always the risk of war with neighboring countries, et cetera, et cetera. So it's not risk-free. It's not like you're going in here and buying and getting yourself cap rates of 10% and prices are booming and you get a free passport. You're buying into a country with issues that has a history of issues, but where prices have really collapsed over the past few years and seem to have bottomed. But you get that passport and you're diversified away from wherever you're from. So yeah. I think that's very, very interesting.
It's pretty compelling, and I do agree with you. It's if you really study the markets, just going back historically, and you don't have to go back that far. Just go back 50 years, you can see a tremendous shift that the U.S. is losing its stance in the worldwide. It's a superior position. In China, clearly is gaining rapidly, and it's just a matter of time if the trend continues. Historically the U.S. dollar has been the world's reserve, and that could likely and probably would likely change. If the U.S. is not the predominant country in the world anymore. So and I know it definitely is a great advantage to have multiple passports too. To be more mobile. So in any case, I like the strategy, and I like the fact that you can invest in a country where the valuations, $1,000 a square meter, that's just about $100 a foot. And that's a really affordable price by today's standards. That's really good, no matter where you are. So at a minimum, you've got a place you can always go to when you want to get away anyways for a month. And if you're
a beautiful city.
Absolutely. If you're living in Canada or the northern United States in the wintertime, it's often not too pleasant. And go over there, you've got, palm trees and beautiful scenery, for the cold months. So, plus it does give you access to both Europe and Asia, which is really important. So, in any case, this was a fascinating subject. So as far as, being able to, let's say you buy a property in Constantinople, is it fairly easy to rent that out? And there's different types of rentals. You can do long-term rentals, and people stay there for a year with their family and then move on, or like in what's become very popular in the last decade is Airbnb, vacation rentals. What does that type of business landscape look like if you want to rent your apartment? Is it how are the rules? Maybe not a comparison to the U.S., but generally speaking, for the owner and for the tenant,
Cool. So look, investing in Istanbul I see it more as a passport play than it is as a pure investment in the sense that I don't see any immediate catalysts for a re-rating of real estate here. So I would see it more for the passport. But if you want to go into the details in terms of rental yields on the local market, long term, you're looking at 4%, which is not very good. You can go to any town in the Midwest and you'll get much better. And if you do Airbnb, after Airbnb fees, property management, et cetera, you'd end up with 5 to 6%. But it's actually not legal to do Airbnb, but everyone kind of does it.
Okay.
So it's also, when you invest in emerging markets, you have to be a bit more tolerant of ambiguity.
Yeah.
But there's also, I'd like to touch on wealth preservation, because sure, if what your audience are looking for is yield, then I will have a hard time to point out a country in the world that will offer better cap rates using leverage in the US in some town in the Midwest in the US. It's going to be very hard. But if you want to invest in terms of cash and you want to buy prime property, because you see people in the US buying stuff in New York or, in Miami, et cetera, and they're not really out there for speculation. They're not out there for rental yields. Often some of these places have high HOA fees. They barely get any net rental yields whatsoever. They just want to buy prime real estate. Then why not go to a beautiful city like Budapest in Hungary, where you can buy historical buildings that have been around for 100, 200 years that are absolutely gorgeous from an architectural point of view, that survived multiple world wars, that survived poor maintenance of communism, and then are still standing there and are very strong.
Yeah.
So when you buy real estate like this, and this is quite different from what you have in the US, in the sense that most real estate in the US depreciates over time. You buy a single family home. After 20 years in the US, generally speaking, a house is old. People consider it to be an old house. And that's actually a mistake that Europeans often make when investing in the US. They go to the US, they look at a house, they're like, oh, it's pretty nice. And yeah, it's 20 years old, it's pretty recent. They buy it, and then they try to rent it out on the local market. And then Americans are like, yeah, no, this house needs to be refurbished. It's getting old. But when you buy in a place like Budapest, maybe the interior design of the actual apartment you buy depreciates, but the architecture, the actual building structure doesn't depreciate. It only appreciates in value with time. So that's a very different play from what you would typically be able to invest in the US. Yeah. And it's not necessarily very expensive. You buy prime Budapest, like superb apartment, and you would be paying maybe 4,000 euros a square meter. And if you go into areas of Paris where there are a lot of immigrants, you barely see any European around that are dangerous from a crime point of view, and you'll be paying 8,000 euros a square meter. So, what's better from a wealth preservation point of view, getting core Budapest or getting some lower end area in Paris? So those are also strategies that people can develop for themselves in terms of what is actually their objective with their investment. Like, is it wealth preservation? Do they want yield? Do they want options in life? And that's what international real estate offers. There's so many flavors out there.
Yeah, it's interesting. I've been blessed to be able to meet some very, very affluent people around the world, and some of them will, they of course have their own private plane and pilot, and what they'll do is they'll travel between countries, and they time it so they're in no country any longer than a certain period of time, and then they commute around the world and are able to minimize their tax burdens, and as a result of doing that, and yet they have these wonderful places that do hold value and do appreciate over time. So I guess we're taking it to a much larger degree than what we're discussing here, but I know people personally who do that, and it's not just they're not just in the Bahamas and the Caribbean. They are doing this in some of the places you mentioned. So it sounds like Turkey's a pretty good place right now. Any other countries come to mind that would be, hey, if there's 25 countries that would be great to do this in, but here's the top five. I know it may change over time, but right now, what would you say are some ones that you're looking at yourself personally or the folks you work with,
Sure. So if you want a passport, then Turkey is a no-brainer. You get deep value real estate. The yields are poor, et cetera, but you get deep value real estate in a city of 15 million, and you get a passport. So that's the easiest play. If you want to combine being able to live somewhere a few months of the year and still get very good rental yields, actually Medellin in Colombia is very interesting. I spent a few weeks in Colombia back in December looking at real estate. So cap rates are very interesting because of the midterm market. What you see is that you have literally millions of Americans that have come to the realization at the same time that, one, they don't need to work at the office anymore. They can work from anywhere in the world.
Yeah.
Two, they can go live in places that are a lot more affordable than the US. So they still get their US dollars and then get to live and spend their money in pesos. Mm-hmm. That's interesting. And three, whether they're Democrats or Republicans or whatever, they are of the opinion that generally life has increasingly become toxic in the US. And by going overseas, they don't need to deal with the whole drama.
Right.
And also because of the US and its geography, a lot of these people want to stay in Latin America and stay in the same time zone. So then you have a fun city like Medellin that is very affordable. You can get some nice, affordable real estate with stunning views, amazing weather. It's called the city of eternal spring. And you get very decent rental yields when you rent on the midterm market, because what you have is all these American digital nomads coming down to Medellin for 1 month, 2 months, 3 months, and they're willing to pay. And that's the difference with European markets. Europeans are a little cheaper, I have to say. Europeans count a little bit more, and the salaries generally, even in Germany, Belgium, France, are a lot lower than what they are in the US. Mm-hmm. So when you buy an apartment in Medellin and you really target the US market, not Europeans, but the US market, you can get some very decent yields. And if you buy for at least $150,000 approximately, as things stand, you get an investment visa, an investor visa that gives you residency for 5 years in Colombia. So You invest in Colombia, you have a place where you can stay that's absolutely gorgeous. It's not expensive. And then when you're not there, you rent it out, you get good yields, and you have essentially a residency visa that comes with it. So again, Colombia comes with its own set of risks. There are presidential elections coming up pretty soon. One of the front runners is some communist-like guy, obviously not a good look. The currency always depreciates, but as the currency depreciates over the last few years, the price of real estate goes up. So in dollar terms, it's flat. So that's a very good. So buying in Medellin for now seems like a good play for yield, not for capital appreciation, but for yield, and from a lifestyle point of view, and a plan B as well with that investor visa.
Yeah.
Then another market that's interesting is it's making headlines. I'd say it's making headlines more in the US than in the actual country, but in Ukraine. So I'm actually investing in Ukraine right now. So I don't know when you're going to publish this, but according to the White House, Russia is going to invade tomorrow. I signed subscription documents. I'm investing in a real estate fund in Ukraine as we speak. I spend a lot of time in Ukraine. I'm a resident there, actually. And there are some very interesting opportunities. It's the country in the world, I would say, where you have the highest cap rates for cash investments. If you invest generally at least $250,000, $300,000, you can get in the office space, in office buildings, you can get gross rental yields of 20%.
Wow.
So, people think Ukraine, Russia's going to invade, and then when I say office buildings, the office is dead. but actually in Ukraine, it's office buildings are the office space is booming in the sense that there's not enough supply.
Right.
There is just not enough supply. It's a supply story. The city of Kyiv, the capital city, has on a per square meter base, on a per capita basis, has like almost like 10 times less office space than Warsaw, the capital of Poland. So there's a massive supply issues. And right now, with a Canadian partner of mine, we're looking at buying an old flour mill in the center of Kyiv, and buying it and then renovating it, adding 2 floors, and turning into a big office building for tech companies that are booming in Ukraine because of all the tech talent that is found there. So that's a bit of crisis investing. We're getting also probably a better deal from the seller, but we're expecting to make 90% returns in 3 years by flipping that building. And that's without the use of any leverage whatsoever. So we're not taking leverage risk. It's really just a cash buy and a cash renovation. So if something happens with interest rates or whatever, it does not impact us. So and that's what's interesting about some of these emerging markets, is that you were saying earlier on that what's interesting about real estate is that it's a real asset, it's physical, you can touch it. But if you actually take a step back, is it really that much of a real asset anymore? Because it's so dependent on interest rates. So in Western countries, and this goes for Australia, Canada, the US, Western Europe, in many cases, real estate is not just a hard asset anymore. It's also part financial asset, and potentially even mostly a financial asset, because it's entirely dependent on central bank policies. But when you go into a place like Ukraine hasn't had any mortgages for the last 10 years. It's a pure cash market. Prices, the country went through 2 revolutions, not 1, 2. It went through war in the east of the country, and went through Crimea was taken away by Russia. It had millions of people leave to go work in Western Europe. It had devaluation of the local currency, et cetera, et cetera. And prices just wouldn't go below a certain level. That was actual, true, core support levels. And when we're making that deal right now, buying that property and paying for all the renovations, we're just landing exactly at support.
Yeah.
So anything above is just pure upside, and we plan on getting it. But if everything goes wrong, unless there's a nuclear bomb that lands in Kyiv, we're still at support, because it just can't really go below. So that's a real asset. So that's what we find attractive in a world where inflation seems to be a real issue.
Yeah. Well, that's it. So we got Montenegro, Turkey, Colombia, and Ukraine. It was interesting. I know a lot of Americans listening think, well, what about Costa Rica and Belize and the Bahamas, because that's what they're used to, but that's just one small part of the world. Here we're talking.
Those are lifestyle. Those are just lifestyle places. You rarely get any good returns. You just get yourself a nice place. Generally, it's pretty expensive. I mean, real estate in Costa Rica is not cheap, and the Bahamas either. Belize, but there's no local market. It's purely Americans selling to Americans.
Yeah.
So it's a very different market. Generally, I prefer to invest in countries where there is a local market. Yeah,
I agree. Yep. Costa Rica, it's all American expats. Every house for sale is owned by an American. And we always question, if it's such a nice place, why are so many Americans selling their properties down there? So in any case, I like the idea of Montenegro myself, and I have clients in Colombia, and they love it. Their families are still there. And I have some folks, clients from Ukraine also. They don't live there now, but from Ukraine. And so this has been one of my favorite podcasts. I mean, I definitely think I'd like to have you back on again. So
my pleasure.
I know we're kind of at that magical half-hour mark, so we should probably wrap it up. But how Ladislas, how can people get a hold of you or any information you have on a website, LinkedIn, Twitter, Facebook, how can people reach you and contact you?
So what I really recommend people do is sign up to my private list. It's entirely free. And then they'll get updates as I travel around the world and look at investment and immigration opportunities, mostly in emerging and frontier markets. So my website is called The Wandering Investor. So I wander around. I'm thewanderinginvestor.com/private list, and you can sign up for the private list. I'm also on YouTube, The Wandering Investor. But my main channel really is the website, and I write a lot of. If you go to the real estate section, you'll see a number of different cities and countries where I do a thorough analysis of the markets. Actually, most of my analysis says don't invest there, and with exact rental yield calculations for all of these cities.
Okay, so it's thewanderinginvestor.com/ and then it's private list.
Yeah, thewanderinginvestor.com.
Excellent. Well, everybody listening, you just heard it right from the guy. So I'm going to do it myself. I'm going to get on the private list because I'm extremely interested in the subject. Just where I am in life, I'm able to do these kind of things, and I love to travel. So I think it's the time is right, and I'm a very positive, optimistic person, but I do believe we're seeing the beginning of some major changes in the world, and just like anything else in life, where there's change, there's going to be opportunity. You just have to put yourself on the right side of the equation, and then getting information and making contacts like this is very important. So again, go check that out. And while you're online, go ahead and check out the globalinvestoragent.com, and we're growing our agent base. These are investors we've actually trained to work with us investors. So you have to look for them specifically. Certified investor agent on the Global Investor Agent team. You can check out their names, their profiles, and as we grow, we're obviously growing that agent base around the country too. And again, every country has different customs, but there's wherever real estate is bought and sold, you generally have some form of agency. So different laws, but the relationships there. So in any case, and also if you could please, when you're finished listening to this podcast, please leave a review for Ladislas. This has been a great podcast, and hopefully gave you some hope for the future for your investing, and also traveling around the world and maybe setting yourself up in a place like Turkey for future generations. So thanks again, Ladislas. We appreciate you doing this, and appreciate all the listeners. God bless you and your families, and we will see you on the next podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.